Question: SEBI allowed trading in stock index futures in, the options are A. January 2001, B. January 2002, C. July 2002, D. None of these. The correct answer is January 2001. Explanation: SEBI introduced stock index futures trading in India in January 2001 as part of derivatives market reforms. Question: during 11 5-year plan, it was proposed to spend _% of GDP on education. The options are A. 1.5, B. 2.5, C. 3.5, D. None of these. The correct answer is none of these. Explanation: the 11th 5-year plan targeted expenditure of about 6% of GDP on education. Question: foreign universities bill proposes to promote R&D, to improve quality of higher education, to boost investment in higher education. Which of the following combination is correct? The options are A. 1 and 2, B. 1 and 3, C. 2 and 3, D. 1, 2 and 3. The correct answer is 1, 2 and 3. Explanation: the bill aimed at improving research, quality standards, and investment inflow in higher education. Question: assertion: a fiscal deficit shall lead to inflation. Reason: are the entire fiscal deficit is filled through monetization. The options are A. both A and R are correct, B. both A and R are incorrect, C. A is correct and R is incorrect, D. A is incorrect and R is correct. The correct answer is A is correct and R is incorrect. Explanation: fiscal deficit may cause inflation, but it is not always financed entirely through monetization. Question: match the items under List A with those under List B. List A: I. Gates, 2. CCI, 3. SERA, 4. IRDA. List B: monopoly, banking services, futures, actuarial science. The options are A. 1 to 3 4, B. 4 1 to 3, C. 3 4 1 2, D. 2 1 3 4. The correct answer is 2 1 3 4. Explanation: Gates relates to services including banking, CCI regulates monopolies, SERA relates to securities futures regulation, and IRDA governs actuarial science and insurance. Question: which of the following is a responsibility center? The options are A. Research Center, B. Investment Center, C. Production Center, D. Service Center. The correct answer is Investment Center. Explanation: an investment center controls revenues, costs, and investments, making it a responsibility center. Question: under the scarcity conditions, the decision is based on. The options are A. Profit per unit of key factor, B. Marginal cost ratio per unit of key factor, C. Contribution per unit of the key factor, D. Marginal cost per unit of key factor. The correct answer is contribution per unit of the key factor. Explanation: scarce resources are allocated to products yielding maximum contribution per limiting factor. Question: which combination of the following factors drives up ROI? I. Reduced borrowing cost, 2. Increased sales, 3. Reduced investment level, 4. Increased investment level. The options are A. I and 2, B. 2 and 3, C. 2 and 4, D. 3 and 4. The correct answer is 3 and 4. Explanation: unfavorable investment structure and excessive investment may reduce return on investment. Question: assertion: a patents acquired by a firm should not be shown on the balance sheet. Reason: our patents represent a fictitious asset. The options are A. both A and R are correct, B. both A and R are incorrect, C. A is correct and R is incorrect, D. A is incorrect and R is correct. The correct answer is both A and R are incorrect. Explanation: patents are intangible assets and are shown on the balance sheet. They are not fictitious assets. Question: match the items under List A with List B. List A: I. Capital gearing. 2. ATR. 3. PE. 4. Investment turnover. List B. Liquidity, long-term solvency, capital productivity, cost of equity. The options are A. 3421, B. 1234, C. 4132, D. 2143. The correct answer is 2143. Explanation: capital gearing relates to solvency, ATR to liquidity, PE reflects cost of equity expectations, and investment turnover indicates productivity.